Good day. Today we are going to talk about the dwelling and homeowners policies, and you must know and understand the perils which will be included in the coverage in both the homeowner and the dwelling policy. If you understand this will be the foundation for all other policies. You must understand all these perils and the structure of the contract, which is the policy, so that you can sell policies to all clients. So let's start now with understanding dwelling insurance. In dwelling insurance, you don't have to live in these 1 to 4 units. Yes, we do insure these 1 to 4 units which are non-owner occupied, but yes, the owner may live there. And the dwellings which will not be acceptable to homeowners usually are placed in dwelling. Basically, the structure of homeowners policies and dwelling policies will be what we call the DP1 policy. It's called the basic. And DP2 is called the broad form. Incidentally, this form, we have like 10,000 forms that we use on a daily basis in all 50 states and Puerto Rico and United States Virgin Islands and all American possessions or territories. And then we have DP3. This is called the special. And yes, if you notice carefully, in basic we'll have only three perils which are covered, and it's cheap. Number one, we have the basic fire. Everybody has fire insurance, fire, lightning, and internal explosion. And in the broad form, we have all the basic policies, all the basic perils, pardon me, plus what we call the extended coverages. And this is what we call W.C. Schaefer. And all these, this is what we call the W.C. Schaefer. And that is for windstorm, civil commotion, smoke, hail. We have vehicles, volcanic eruption, explosion, and riot. And then we have the broad form, it's called the big effect. Okay, and so these perils, we have the basic EC, extended coverage, and that EC may be called W.C. Schaefer, plus the big effect for property damage, ice, snow, sleet, glass damage, accidental bursting of pipes, falling objects, freezing of pipes, and we have electrical, building collapse, and tearing apart. You must know these perils, so your first step is to memorize them so you can sell these policies. And all these perils are involved here with the special. The special has all risk, or open perils as it's called, open perils. So once you understand this, the road to understanding homeowners insurance is pretty much paved already. Again, here you must understand what is, first of all, the perils, then the structure of the policy, basic, broad, and special. And they have all these. This is what you're buying to cover yourself, because you have interest in all these properties, you know, fire, lightning, and internal explosion. Then we have extended coverage, W.C. Schaefer, big effect. All these things are included in all risk or open perils, except what we call the named exclusions. Named exclusions, and there's a list, we will give it to you. The named exclusions. Okay. And this is, I would say, 75% of the basic foundation to understand all these policies. And all the other policies, such as homeowners, commercial, they will have the exact same perils plus additional perils involved. But for the time being, you must know all these things. In our next segment, we will talk about the contracts and how they fit into the perils and the coverage. Hi again. In this next segment, we'll talk about homeowners and how dwelling is integrated into homeowners. And number one, you must understand that because we have DP1, DP2, and DP3, and you know this is for the basic, the broad, and the special perils. We will have the coverage of A, B, C, D, and E. All these things are covered in here, and this is for dwelling. Other structures or detached structures. Contents, anything that moves around in your house. It's called contents, and they are insured in bulk. We talk about all these things in depth as we go along. And this is for fair rental value, loss of revenue, and additional living expenses, ALE I call it, and by endorsement. You may buy coverages for liability, and liability covers bodily injury and property damage. Third-party claims against you because of your negligence not to repair your sidewalk and people are injured because of that, or any other people coming on your premises and they're injured. And then L, and this is M for medical payments to them because they're injured on your property. You may also include in this endorsement broad theft coverage, which is on or off the premises. Or you may buy just limited theft, which is on premises only. And there you have it. Example to see how this works. We have a dwelling, just as an example, hypothetical $100,000. Of course, in today's world, we cannot buy a house for $100,000. We're talking about maybe $1 million or $2 million and so forth. The structure, 10% of A is allowed without additional premiums. So if your structure is destroyed completely, you get $100,000. In addition, if you have a detached garage or pool or any other structure, they'll give you $10,000 more. Contents, they allow you or offer you 50% of A, or $50,000. You may increase that to whatever level you want or decrease it. You pay a premium here. Let's call it PO, premium O, and you have another premium here for your contents, P1. Then if this building is destroyed completely and you lose your income for the other 3 units or 4 units, as the case may be, then they'll take that into consideration if you live there, additional living expenses. So both of these will be joined and they will give you 20% of A. So that will be $20,000. And of course, you buy this separately, the liability, medical payments, and so forth. So that's a different premium right here. P2, and usually liability, $300,000, let's say, and medical payments, $5,000. And essentially, that will be your structure of a policy of a DPs, you know. All right. So with that in mind, you can transfer all this into homeowners policies. If you live on your you live in the building, you must live in the building in dwelling, or rather in homeowners insurance. On the other hand, you don't have to live in your dwelling. It's the same building, but because you can't get insurance otherwise, they put you in the dwelling. If you live there, perhaps you can get the homeowner's insurance, which we'll talk about right now. So I'll just erase all of this and see how everything fits in. Okay. So in let's say you qualify for homeowners because you're going to live in your property. You may buy, well, they don't offer you HO1, they used to, but in today's world, nobody buys that. So we leave that blank. Then we have DP, or rather HO2, and HO3. It's the same thing, it's called the broad and the special. on a special. And in homeowners insurance, we do have a bigger program. It continues with HO4 for people who rent. They may buy a policy to protect their contents and liability if they are sued. And we have HO5, which is called comprehensive. And this is a better policy than HO3. I know everyone likes to say that, or sell HO3, but in HO3 you'll learn that you have all risk only for dwelling and detached structures. In HO5 you have all risk for dwelling, detached structures and contents. HO3 doesn't offer all risk, it offers only the broad form or the named perils. HO6 is for co-ops and condos. And the difference is ownership. Here it's just like renters, where you can buy insurance to cover your contents and liability. And the condo is just like 1 to 4 units, except in the condo you share in the coverage for dwelling. You can buy up to 25% of the coverage, while the housing association can buy must buy the other 75% or whatever percentage remains. Then we have no HO7 but HO8, the modified homeowners, where we have the replacement cost greater than the fair market value. Okay, so this is what you must understand. DP 1213 is similar to homeowners policy, and these are the anomalies, if you will, the differences. So we have no HO1, but we do have HO2, 3, 4, 5, 6, and 8. And basically, now we have in homeowners, we have section 1, which covers A, B, C, D, meaning dwelling, detached structures, contents, just like dwelling, and loss of use. And that simply means it includes fair rental value, additional living expenses, fair rental value, additional living expenses, and civil authority restrictions. And already you know fair rental value, that's the rent you collect for renting out 1 to 4 units. If you live there, you will get additional living expenses, just like here. And if you cannot go back to your home because of the city, through its agencies of the fire department, police department, saying you cannot return to your home, then for after 72 hours, you can get up to 2 weeks of loss of your rentals. Okay, so that is section 1. Under section 2, we have liability, which is E, and F, which is medical payments. So you see how very similar they are. Once again, you must understand, if you buy a dwelling DP 1, 2, or 3, you will get all these coverages. It's a package policy, and it's both a first party and a third party policy that you're buying. A package because they combine fire with other perils. And also you have coverages for the direct losses of A, B, and C, and indirect losses for D and E. And by endorsement for additional premiums in the dwelling, you'll get liability and medical payments, broad theft or limited theft coverage. However, in the homeowners, all these things come as a package, and it's divided up into Section 1 and Section 2. Okay, so we have under Section 1 the A, B, and C. Okay, that's dwelling, detached structures and contents, and laws of use, A, B, C, and D. And A, B, and C, direct losses, and D, indirect losses. And C, we have liability and medical payments. This is Section 2. Very good. So while you digest that, we will pause and come back to our next section that we will cover with you, and we'll show you how, once you know the of course the laws and regulations of insurance, and you know the perils, you understand these things, and you have a contract, you can sell all these various policies, the DPs and the HOs, dwelling property and homeowners, and later on we'll show you how, with that knowledge, you can spring ahead and sell commercial insurance, because they have basically the same perils coverages with few additions. Okay, so until the next time we meet, we'll say goodbye, and we'll see you in the next segment. Thank you very much.